Hello and welcome to another live trading session. Today we're putting on the first UOTS 2.0 trade. Thanks for joining in. And yesterday we did a video, a little bit longer video, almost an hour, and we went over the whole strategy. And for the most part, obviously there's going to be there are going to be more details and everything. Since yesterday I was working a little bit on a spreadsheet. The good news is the new spreadsheet for this strategy will be much simpler than the previous one. So it's going to be an easy and simple spreadsheet, but it's not done yet. I just put something together so we can get started, and then we'll go from there. And I'll adjust that as we go before making it available for everyone. And so for if you watched yesterday's video, you probably have an idea what we're gonna do. But for those that haven't watched, this trading strategy will be put in different in sequence, three stages. So today we're putting a first stage on, and we'll keep that stage on so long as the market is not pulling back strongly or the VIX is going up, and then we keep rolling that strike until something happens, either market goes down or up. It doesn't really matter. The good thing is we can we can look forward to market going up, but we can also look forward to market going down, and us being able to put on a little bit stronger trade with a little bit more premium involved. But let's take a look at a trade sheet. I mean the spreadsheet here. So just to keep an eye here, we'll put our, let me take a look here. Let me take a peek. So 47,522 is our net lick. 47,525, is that what I said? Something, oops. I guess that's right. And the market right now is 56.15. Okay, we'll record that right here, 56.15, and to give us a start for the steps down. The first step, this is with a 0% drop, and then the second step would be 4% down, and then 10% down. So we're gonna start right here. But if you recall, with the first contract with the low leverage, we are looking to collect a little bit more delta premium than theta premium itself. So to do that, we're looking to go at the money or in the money with our naked put. So we'll go ahead and do that. By the way, I have some put debit spreads left over from the from last month, and then I also got assigned some warrants from some stock a couple of years ago that went into bankruptcy or something, and this is some proceeding. It just got into my account, and I got some notification from Tasty Trade that I don't know, I need to tell them what to do with it, but it's minor. But anyhow, that's what it is, in case you're wondering. And then also we have our SGov collecting a little bit of free interest for us. So let's go to MES and let's go to trade. And if you remember, we're looking into very short duration, short DT for our first, the main, the always on strike or contract. And in this particular case, we'll look for 1 day, which is until tomorrow, right? August 30th. And market is right here. So let's see what we get. This is the extrinsic value right here. And then if we go a little bit in the money, the deeper in the money we go, the more extrinsic value we lose on the way up, but we gain a little bit more of potential delta value. So like a kinetic and potential energy. It's there, but it might not get used. So same here. If the market doesn't come to us, that delta value is not going to get realized right away as theta will. So if we take a look at total combined here, we're looking at 100 bucks roughly, but we want to go a little bit deeper in the money with this first contract, to be able to get the beta of the market, to get this delta should the market go up. And we're not sure yet what kind of how far, how deep in the money will go. But for right now, let's look around 60 delta, going a little bit in 130. We're collecting 130 total, 60 of which is extrinsic value. And as you know, by tomorrow, by the end of the day, we'll get to keep this 60 bucks or whatever, minus a little bit what's left over before we close. But we'll get majority of that regardless of the market, what the market does. But again, if the market goes up, we'll be collecting the delta premium that we have here. And if the market goes down, okay, we'll just keep our theta, we'll roll this one out, and then we'll look forward to potentially being able to put the second level trade 4% below the market. So I think we're gonna go ahead and try and collect this right here. So let's go a little bit on the greedy side here and just see if we can get it closed, which we did. All right. And then we're going to go and record that. Let me just take a look again. This is 5630 strike. Let me just do that. So, oops, 5630. It's going to take me a day or two to get used to this new sheet. Initial credit. Let's see what we got. Where is it? 2850. 2850. And once we get to rolling, because most of the time we'll be rolling these contracts, we'll be adding the additional premium here and then counting the number of rolls in order to calculate the commission and fees that we're paying along the way. 2850, 28.5, sorry. So we got around $143. And so that's it. That's all there is to do. Our current leverage is at 0.59, so we're less than 1-for-1 with the market, and that's the idea. As I said, the plan is to stay in the neighborhood of half x, 0.5x for the leverage for the first initial strike. This is the contract that is usually above the market, above the spot, and it allows us to collect whatever delta the market movement and the theta is available. And we'll see tomorrow what happens, and obviously we'll have to do something tomorrow because this is one DTE, and we don't want to let this expire and then get assigned or whatnot. We just want to make sure that we either roll it, or if the market moves up strongly, then we'll move the strike up. If it goes down, we'll do something else. So that's on that. Any questions with this, guys? Feel free to jump in if there is any questions. Oh, okay. I have more work to do here. I need to add performance tab. I need to do all those other things. But I think this is going to be pretty simple. I put 3 of these together because trade 1 will be this initial strike. Then if we have the second one, it will go here. And then the third one would go here. And so this would be one group of trades, one sequence. And then once that one gets done, we go to the next one afterwards. But yeah, short and sweet. If there is anything, hit me in the Discord or in the comments below. If you want to join our Discord, the link is in the description below. Otherwise, have a fantastic rest of the day, and I'll see you tomorrow. Alrighty. Let's